another founding car. This is about the ebb and flow that you see in very many places. And I will go back to shares at this time. Oftentimes people think that shares or stocks or crypto will stay the same and will only grow, etc. But it's not the case. Normally it can grow a little bit and then it will be corrected again, and then it can grow a little bit, and then you will see on average it will grow. But some people are trying to expose this weakness, that this tide and correction facilities that you see, to trade a little bit more, so they still have the benefit of the upward cycle, like all those that invest in it, but they also can have a little bit of benefit when it rises, and is almost at the peak or at the peak they will sell, and when it corrects again it goes down, and then when it's almost at the bottom then they will then buy again, and the difference is then their profit. Of course, normally in transactions there are also fees included, but this is in general what they do. And this is a little bit unnatural to most, because if something is performing, normally you want to have more. For example, if you have a performance car and then the next version comes and it has even better performance, right? Or you have a car and you want to tune it a little bit to have it that's already fast, your car is already fast, and then you want to tune it a little bit so it gets even faster. Of course, this is a natural phenomenon, but you have to go a little bit counterintuitive. So when it's very high, you should think it's now this high, there's a higher probability that it will drop instead of rise again. And of course sometimes you make a mistake, so you see a correction at the top and then you sell, and then it will rise again, and then you miss that rise. But in general, and that's the thing, in general it will work quite well. And some assets of course have more of a rising flow or trend, and then it will be less helpful than those assets that are more fluctuating and don't have that exaggerated rising trend so much. So if the rising trend is quite high, then the day trading benefit is often a little bit less or a lot less. It can still have volatility, so there's a big difference between the highs and the lows, but you can miss out on another rise, and that's a big detrimental factor then in the day trading strategy that day traders use. Whereas if it's more of a stable asset, a normal investor will not get a lot of benefit of the stable asset because it isn't growing that much. But if it's fluctuating a lot, still day traders can have a ballpark and have a lot of fun with that. So that gave you some of the insights into day trading. I'm not a day trader myself, but there are people that make a living out of this. So you can read up a little bit more if you find this interesting, and you can just try it out yourself. But of course there are risks associated with investing. There are also risks associated with not investing, that you miss out on the rises. And you should calculate that risk, and also your emotions, because especially in day trading, you can imagine that your emotions will also fluctuate quite a bit. So take that into consideration. For some people it could be something, some people even make their living out of it. For some people you should just stay away from it. Have a great day.